The champagne is already poured. In a few hours, nearly 1 billion people will count down the final seconds of the year, singing as if nothing is wrong. Let them celebrate. Let them stay distracted. Because while glasses are raised, something far more important is happening behind closed doors. It is December 31st, 2025. I am not here to wish you a happy new year. I am here to deliver a final warning. Yesterday, the warning signs were impossible to ignore. The LBMA website went offline. Australian customs halted silver shipments. The $70 bear trap collapsed as physical buyers absorbed every ounce banks attempted to unload. And yet, what happens tonight at midnight Beijing time makes all of that look insignificant. While the West drinks champagne, China is executing the most consequential shift in the global metals market in half a century. The rumors are no longer rumors. The timeline is locked. In this emergency broadcast, I'm going to explain exactly how China's 44-company export lockdown works. I am going to put you inside the mind of an industrial buyer who just lost their supply chain. I am going to lay out precise price targets, and before dealers reprice everything tomorrow, I am going to give you a 24-hour survival checklist. The $74 price on your screen is already meaningless. It is a shadow of a market that no longer exists. This is the story of the night the vault was locked. Understand what this means for you personally. If you're holding physical silver, you are now holding a resource being actively nationalized by the world's second largest economy. Your ounces are not just rising in dollar terms, they are becoming strategically irreplaceable. The same silver in your safe is the same silver Tesla cannot secure, Samsung cannot source, and the US military requires for guidance systems. You are not holding a commodity. You are holding a siege asset. If you are waiting to buy, the window you believe still exists does not. After midnight, every ounce outside China becomes contested territory. Dealers will reprice by morning. Yesterday's $5 premiums become $15 next week, $25 by February. And if you're holding paper silver, SLV, futures, unallocated accounts, understand what you truly own. You hold a claim on a system that just lost its largest supplier. When New York prints $74 and Shanghai trades $83, which number will your ETF honor if redemption is requested? This is not a trading event. This is a resource bifurcation. By tomorrow, you either own metal or you own a promise that cannot be fulfilled. Now let's reset and explain what is happening. China is implementing a strategic resource preservation mandate effective at midnight tonight. This is not a tariff. It is not a tax. It is a hard stop. For 20 years, China operated as the world's factory. It imported raw silver, converted it into finished products, and exported those goods globally. Silver moved freely. That model is over. China examined the 1.1 billion ounce structural deficit and reached a simple conclusion. There is not enough silver for everyone. The new rule is straightforward. Metal refined in China stays in China. The media will describe this as a licensing adjustment. They will insist exports are not banned, merely regulated. Ignore the semantics. The Ministry of Commerce released the approved exporter list for 2026. Out of thousands of refiners and suppliers in a nation of 1.4 billion people, only 44 companies are authorized to move silver across the border. This is not regulation. It is a tourniquet. Here's how the system works. You are Apple. You need silver for the iPhone 18. Your Shenzhen supplier informs you they cannot ship. They are not on the approved list. They advise you to contact one of the 44 authorized exporters. You do. And you quickly discover who these companies are. They are state-owned enterprises. They answer directly to Beijing. They quote $95 per ounce, $20 above spot. If inventory is available, often it is not. Domestic manufacturers are prioritized. But here's the real choke point. Before any shipment leaves the country, an export application is filed. It sits on a desk in Beijing. A party official evaluates a single question. Does the state need this silver more than the buyer? If the answer is yes, nothing moves. The list of 44 companies is not a door. It is a vault with a combination only Beijing controls. There was once an escape route. For years, small refiners shipped silver through Hong Kong disguised as jewelry components. Millions of ounces moved quietly through this gray market. As of midnight, that route is sealed. The new mandate introduces criminal penalties for unlicensed exports. The shadow supply is gone. The river has become a faucet, and the party controls the valve. Now let me put you inside the next stage of this crisis. You are the procurement manager at First Solar. You are contracted to deliver 100,000 panels to Texas by February 15th. Each panel requires 20 grams of silver paste. You need 64,000 ounces. Yesterday, your Guangzhou supplier quoted $74 per ounce. Total cost, $4.7 million. Margins were tight but workable. Today, you call again. 3 words. We cannot ship. Not approved. Call the 44. You spend New Year's Eve dialing Beijing. Eventually, you reach China National Gold Group. They quote $95 per ounce. if inventory exists. They are uncertain. Domestic orders take priority. They promise an answer in 3 to 5 business days. Your production line starts January 6th. Your options are brutal. Pay $95. Cost jumps to $6.1 million. Profit disappears. Missed delivery. Face $10 million in penalties. Stock drops 15%. Shut down production. Lay off 200 workers. This scenario is unfolding right now across solar manufacturers, electronics firms, and defense contractors worldwide. This panic, real industrial demand colliding with a supply wall, is what drives price from $83 to $100 to $120. We have seen this movie before. In 2010, China reduced rare earth exports by 40%. Western dependence was absolute. Neodymium surged from $40 to $400 per kilogram in 6 months. Demand did not spike. Supply was nationalized. The pattern is identical. Step 1, regulation. Step 2, approval slow. Step 3, approval stop. Step 4, internal prices stabilize while external prices explode. We are at step 1, price targets based on arithmetic, not hype. By January 15th, Shanghai premiums widened by $15 to $20. Real price, $89 to $94. By the end of January, industrial panic accelerates. Eastern price, $100. By the end of Q1, if the mandate holds, $120. Now your 24-hour action plan. If you hold physical silver, do nothing. Do not sell into rising prices. Do not exchange metal for depreciating currency. You own a strategic asset governments are hoarding. Ignore spot. Watch Shanghai. Watch dealer premiums. If you plan to buy, act immediately. Once dealers reprice based on Eastern premiums, the window closes. No dip is coming. Arbitrage is dead. If you hold paper silver, read the prospectus tonight. Look for force majeure and cash settlement clauses. If market dislocation is declared, they settle at their price, not yours. Nickel 2022 proved this risk is real. If you hold mining stocks, favor stable jurisdictions. Canada over Mexico, Nevada over Peru. Rising silver prices invite windfall taxes. If you are trading leverage, stop. This is not a trade. It is a regime shift. Volatility will destroy margin accounts. Stop staring at spot price. If the screen says $74, but you cannot buy below $85, the price is $85. If China pays $100, the price is $100. Paper belongs to the West. Metal belongs to the East. Tomorrow we find out which matters. While others chased memes and AI stocks, you stacked ounces. While silver was mocked, you read the deficit data. While inflation was called transitory, you converted currency into metal. Tonight, as fireworks light the sky, the largest supply shock in 50 years is unfolding. This is not luck. It is preparation. 2025 was the year volatility tried to shake holders out. It failed. 2026 is the year the supply chain snaps. Not a bear trap, not a short squeeze, a resource bifurcation, east versus west. And you saw it coming? Happy New Year. Welcome to the two-price world.
Hello everyone, how are you? Welcome back to my channel and my new video. So friend, today video is a very informative video. So please watch this video and like and subscribe my channel for more new updates and new videos. Let's start. The jump gas is already forward in a few hours. Nearly a billion people will count down the final seconds of the year. Singing is a if nothing is wrong, let them celebrate, let them stay distracted. Because well glass are reside something far more important is happening behind closed doors. It is December 31, 2025. I am not here to wish you a happy new year. I am here to deliver a final warning. Yesterday, the warning sounds very impossible to ignore. The LBMA website we went offline. Australian customers halted silver shipments. The $70 bear trap collapse is a physical. Bears absorbed every ounce. Banks attempts to unload. And it what happens tonight at midnight Beijing time. Markets all of the look significant. Well, the West rings champions. China is exerting the most consequential shift in the global metals market in half a century. The rumors are no longer rumors, the plan is located. In this emergency broadcast, I am going to explain exactly how China 24 company expert lockdown works. I am going to put so friend, please like this video and subscribe my channel for more videos. Thank you.